Hey guys, Mike here. So happy Mother's Day to all the mothers out there. Thank you for all you do. Trust me, as a man, I can speak for all men and say we really appreciate everything you do, okay? And happy Mother's Day to my wife. And so this one's going to be a jam-packed video, but we're going to do it a little differently. I'll go into a bunch of information we need to pay attention to for this week, especially in the options market. But then I'm going to go into something, three things in particular that I saw in the comments yesterday. Two, just kind of extrapolating on what people were saying, and one, more of a correction. And so this person doesn't think that's actually true about when a market bottoms. Okay, and so if you got any questions, let me know. Again, I read all the comments. Sometimes I don't get back to them as fast as I should. And by the way, if you're a viewer who put a comment about what you're doing for your child's account, please put it back down in there. I went to look for it to answer it and I couldn't find it. So please feel free to put that back there. I really appreciate it. Thanks for everybody who watched the video yesterday. Thank you for that. And something that happened this week, because I mean, again, this market, first time it's ever happened. And it's just amazing to see. But you know, what do we always talk about, these big mega caps, right guys? Apple. Look at this right here. Apple now has a bigger market cap than the entire Russell 2000. And you can see, I forget how many years this goes back, but, and why is that? Because this is the first supposedly bottoming process we've been through that the Russell's not participated. It's going down, while Apple, of course, is gaining an incredible market cap. I think it has, what is it, 2.7 billion or something like that right now. So it's approaching 3 billion. Maybe we'll reach 3 billion this year. So yes, one stock, of course, not the only one holding up the market, but 10 of them are. But that one stock now is worth more than the Russell 2000. It just shows, again, what small caps have been doing, right? And I think when you see something like that, this shouldn't shock you, right? U.S. tech is back near record levels relative to the S&P 500, right? And it's back to the dot-com era. And this is the S&P 500 Information Technology Index divided by the S&P 500. And so we saw it in 2020. Now we're getting close to being back at it. Again, we haven't been there since the dot-com era. And I don't think that surprises everybody, because tech has been absolutely on a rampage. And when you compare it to the rest of the S&P 500, not so much the case, right? And so it's definitely something to keep an eye on for sure. And again, I think something else won't shock people, and I forgot to mention this yesterday, my fault, was the Qs, speaking of technology, hit a new 2023 high, right? So it continues to go up, while the S&P just kind of trades in a chopped up range, right? And so congratulations to the Qs on that one. Good job. Now, at the same time, what's happening, this is why it was hurting the S&P, you know, we pulled, or investors pulled, $2.1 billion out of regional bank stocks just last week alone. And so, again, you see where it's at. I mean, it's just a hot mess, and you know, we're back to where the 2020 levels were. And you know, is this going to stop? Probably not. We'll have to see. But keep this in mind. I like to look at this, you know, just to see what's coming on for Monday and then next week. I like to see if we're bearish or bullish. And of course, what do you see? More puts than calls again, right? So a lot more bearishness. You see that 408 right there. We'll see if we break that. This is for Monday. Now, looking at the week, so when we do the weekly expiration, a whole lot more puts than calls so far. That will change, that number up there. That will absolutely change throughout the week, which you can see 400, huge amount of puts. And, I mean, it's just puts all over the place. The call spikes are so minute, even though some people think we're going to 430, 440, I guess, by the end of next Friday. But still, you know, what are we chopping in? 410 to 412 is what the bulls keep capturing each time. And again, one thing to keep in mind is something, of course, all this goes to members every day, but you know, what's the weekly range the options market is expecting, since options, you know, obviously dictate which direction we're going. 405, as you can see, and then we're going to go up to around, at the most, they're thinking probably around 418-ish. So 405 to 418. We're setting at 411 something right now. So, you know, again, will the bulls give up the 410, 412 area? We'll have to see. I think more importantly, the Qs are the ones to watch, because we'll see if tech continues to rally while the S&P 500 falters, what financials and energy stocks and stuff like that falling. And if you're liking this video, guys, please hit that like and subscribe button. That will be the thumbs up right below the video there. Just go ahead and hit that for me. I sure do appreciate it, and all your support. And if you like this kind of content, think about subscribing. Now, this leads me into a few things that were said in the comments, and so I want to elaborate on what they were said in the comments in case you're unaware of this, okay? And again, I'm never gonna. The one correction I do, I will never call anybody out by name or show them. But the comments, where they're making a statement, which is actually true, I'm gonna show it, and hopefully you don't mind me, put your name on the screen. If that's the case, hit me in the comments, and I'll never do it again. But here you can see Gabriel was saying that the bull market starts when XLF, KRE, IWM, Dow, and New York Stock Exchange are uptrending, right? And so what he's talking about here, let me give you a visual on this, and I told him I was going to do this. So you can see plain as day, this is the 2018, the end when we did the crash and recovered on December 24th. You can see, what do you see moving up really, really hard? Everything. And it's funny, if you look, the IWM is ahead of the Qs. You would think the Qs would be first, but it is not. But you see everything is over double digits, right? And then if we go a little bit farther, during the 2008 recovery, look at KRE, XLF. Those are the two beating down the most, right? So they're way up there. Then you got the Qs, IWM's right behind it. Everything's super, super positive, right? Big time gains right there. Then when we look at 2020, you can see actually again, it's small caps or above everything else. But again, everything is just skyrocketing up. And then, of course, you see now, if you go back to October 2022, and then look here, what do you see? The Qs, the Dow's up some. If we go back, just looking at October, and then you see carries and the dump. But we're going to move it forward and just pull up to 2023. As you can see, what's supposed to be happening is not happening. And what do you see? KRE, which is really the small cap banks, XLF, which of course is pretty much all of them, IWM, New York Stock Exchange, Dow, even the SPY sitting in negative territory. So, it's not something you usually see in a bottoming process, right? We've never seen it before. This is the first time. So it's just something to keep in mind. Now, Richard came out and said, he's very unhappy with the government like most of us because they spend more than they take in and stuff. One thing you need to understand about this is I wrote down here, you will never, ever, ever see a balanced budget again because it would absolutely crush our economy. And what I mean by that, in 2019, the budget deficit was $1 trillion. Now it's 1.4. So it don't matter. Republicans are in charge, Democrats, it's going to be a huge deficit. They spend like, freaking addicts, but they just spend on different things. But understand, if they balance the budget, that means they have to raise taxes, cut expenses, or one or the other, right? But either way, if you did that, you'd be taking up to like $1 to $1.5 trillion out of the economy. You need to understand, in the fiscal year 2022, the federal revenue was equal to 20% of total gross domestic product, GDP, or economic activity. So keep that in mind. That's why you'll never see another balanced budget. We haven't seen a balanced budget since 1999, I think it was, or 2000 was the last time. And the reason why is because we have to have them, that is liquidity, okay, coming into the market. We have to have them sending money to civilian contractors, keeping the Social Security checks rolling out, all that stuff. Without that, can you imagine? Just put in the comments, what do you think would happen to the economy, i.e., and then roll over into the stock market, if they even come out and whispered they were going to balance the budget and then $1 trillion is going to disappear out of the economy? Just think about that really hard. That's why you'll never see it. That's why this is the Fed's market. It's the government's market. It's not our market anymore. They own it. Okay, they run it. Without them, none of this is happening. Okay, so you just got to understand that very quickly. And the stock market knows that. Companies know that. So that's what you got to keep in mind. And for those wondering where their tax dollars go to, this is basically in 2022 what the percentage of expenses were. So you got Medicare, Medicaid, and other healthcare 27%, Social Security 19%. So entitlements 46% in 2022. Income security 18%. I'll show you what that is in just a minute. National defense 12%. Again, we spend 10 times more than any other country in the world. Net interest to service the debt 8%. And all others, 16%. See, all others, which encapsulates a bunch of stuff, only 16%. But income security consists of programs to keep Americans healthy and safe, separated into 6 categories: general retirement, disability insurance, federal employment, retirement. Remember, the government is one of the biggest employees in the country, probably the world, honestly. Disability, military retirement, unemployment compensation, housing assistance, nutrition assistance, things of that nature. So just keep that in mind. And, anybody who will tell you, they believe in, there's a party out there that believes in small government and all this other stuff like that, those days have sailed. Okay, those days have sailed. So the next one was somebody had said, hey, don't worry, the market bottomed 6 months before recession. Again, I'll keep a person's name out of it. You know who you are. If you're watching this, yeah, I'm not sure where you got that information from. Maybe it was a typo, but let me take you through the charts here and show you why that's wrong. And now, if we look at the chart here, I'll show you what I'm talking about when it comes to when they bottom. And this goes back, and I went back to 1954. You can go back farther if you want. But you can plan they see. If you're in TradeView, by the way, just type in recession under indicators and you hit that, and it'll fill in all the recessions for you, so you don't have to keep looking up the dates. And I've confirmed these dates, and they're correct. So if you look, though, when a market bottoms, it's not before a recession. It is in the recession. All right. Sometimes it's early on in the recession, depending on the recession is, but normally, I don't know, anywhere from, when I look at this, 6 to 9 months before the recession ends. Usually it's in when everything is really, really bad. That's when you get it. So you can see right there in the 54 one, right there in the middle of the recession. Again, middle of the recession. You go into 60, 61. You can see middle of the recession. You go into the 70s, right there in the recession, as you can see. If we keep moving forward, don't let me skip that one. Right there in the middle of the recession, right there was close to the end of the recession, actually. Thought it had bottomed 2 other times, if you look at that. Then you go into the 80s, see the same thing. .com was the weirdest one of all. It's the one I could really find where we bottomed in the recession, but the market kept going under because there was a lot of capitulation moments in the .com era. 08, you can see right there, about 5 months before the recession ends, I believe. Actually, 3 or 4 months. And so, but again, before the recession. So keep that in mind. 2020 was the same thing. And so, no, the market does not bottom before a recession. The market has never bottomed before we actually had the rate cuts either. But, again, this could be a year first, and we could have what they call a rolling recession, where it's hitting different sectors at different times, right? That could be also something that's going on, and something, I don't know, I've never lived through that before. So maybe that's what is happening as well, but that's also being floated up there as a hypothesis. So keep that in mind. Let me know what you think in the comments about that. Now, earnings is a boatload of earnings. I'm going to highlight the ones that we all know. Monday, boatload of companies. Most people will not know these companies. Tuesday, you can see Home Depot, C reporting, PaySafe's going to report. And then we go to Wednesday, of course, we're going to see Target, and basically everybody's going to be paying attention to their inventories and how is the consumer looking, right? TGX, the same thing. A couple of fast food joints and stuff. Then you're going to have Cisco reporting in the afternoon right there. Then on Thursday, people are going to pay attention to BABA because remember, China is stimulating their economy. Walmart will pay attention to the same thing for them. We paid attention to for Target, right? How's the consumer looking? And more importantly, are they still raising prices? Because we get our groceries at Walmart. I see some prices coming down, some prices are not. And so that's a big one to pay attention to. Then you're going to have Applied Materials, Ross, places people shop, discount type stores. And so we'll see what they're looking at when it comes to consumer as well. And then John Deere on Friday. You pay attention to that because people are looking at, obviously, do construction, farming, that kind of stuff, equipment. So we'll see how that's going. And then on the economic news, you will have more Fed speakers than you've probably ever seen coming out. But you see the New York Empire State Manufacturing Index. That was the one that gave us a big pop last time. But remember, they don't do as much manufacturers as Philly. So we'll see what they come up with this time. They're expecting an increase again. We'll go with retail sales on the 16th right there, as you can see. And then we'll get more industrial news coming out. There's a lot of industrial news coming out this week. Again, 20 Fed speakers are coming out. I swear it's like every hour there's a Fed speaker. So we'll see what they're trying to steer into the market or what kind of news they're trying to put out there. Then you go your building permits, things of that nature will come out on the 17th. And then on the 18th, pay attention to this one because this is your initial jobless claims, which they're actually expecting to go down, not up again. And then you'll have your continuing jobless claims. They're expecting this to go up. And then there's the Philadelphia Fed Manufacturing Index, which remember was way down last time compared to what the New York one gave us. Okay, so people are going to pay more attention to that one. And then, of course, you'll have a lot more speakers coming out. And then pay attention on Friday because the man himself, Jerome Powell, will be speaking. And so that'll be on weekly options expiration. So I can't wait to see how the algos treat that event. And, who knows what he's going to have to say. But I think when I count, I think it was like 17 different Fed speakers this week. And so, I'm going to pay attention, just kind of see what narrative they're painting. Are they painting the pause? And so what's going to happen is you're going to have a lot of algos kicking in, a lot of volatility probably swinging all over the place because Barr just said something, or this Fed president said, I think they said pause or not pause, or they came out hawkish and all that stuff. But you have no earnings that are going to move the market this week at all. And so those earnings are in the past. So it's another thing that will somewhat in a way calm the markets, or could calm the markets and let it move in a certain direction. But as you can see, with the option market, it seems like there's a lot more puts coming back in than not. And of course, why is the market not dropped? It's like, let's see. And again, as you saw every day last week, I want to see the same thing happens this week, where if we did have a drop, the bulls would come back at like 1:30, 2 o'clock in the afternoon and push it back up to get above that 410, 411 area. And so we'll see if that continues to happen this week. All right. So again, if you got anything out of it, hit the like, subscribe button. Really appreciate it, guys. If you'd like to sign up for the membership, $7.99. Hit right down there to Discord. You get a boatload of stuff for that. So, and let me know what you think. So I'll see you guys tomorrow, and we'll start off a fun week. Have a good one.